In yesterday's video, we had a pretty aggressive tone, expecting a particularly aggressive Fed. We had been listening to the Fed, hearing them talk pretty much every time they talked, and we're anticipating a more aggressive Fed. However, today the market is rallying tremendously, as you can see, and as you probably know by now. And I think it's a little uncalled for. I think it's a little bit of excessive energy, and I think it has to do a lot with the anticipated hawkishness we might have seen, the fearfulness going into it, tremendous cash on the sidelines, and a very big chase, and a loss of sight by what the Fed is continuing to say. Let's go over a couple things that were very important that happened today. Earlier today, the market was up pre-market on some better than expected, i.e. lower than expected JOLTS data. However, Powell's interpretation was quite different than the market's, saying that today's data indicated that there was still a demand and supply imbalance in the labor market. He's not saying this is good data. He didn't say that was good data today. He said that remains tight. Yes, it was lower than expected, but if you break down the data, you can actually see that the parts the Fed cares about most are tremendously strong, and the parts it doesn't care about at all are the ones that are weak and making that number come in below expectations. The parts of the data coming in below expectations are, for example, financial services sector jobs. These are mortgage application processors, these kinds of jobs. Those jobs are being lost en masse, as we know, and as the Fed kind of wants to see, but that's not necessarily what it wants to see with the labor market. Tomorrow we get the PCE data. PCE is the Fed's preferred inflation gauge. And I was today years old when I learned, when Fed Powell was speaking, that the largest component, if I understand correctly, and I'm going to rewatch the whole thing later today, the largest component of PCE is essentially service sector labor. He said one example was haircuts, haircut appointments. If you put haircut into the transcript of the Powell meeting today, you will find exactly what I just talked about and know that this is a fact. The jobs data we got today indicated that lower income, service-focused, restaurant-type jobs were quite strong. So even though the number came in lower than expected, allowed the market to rally a bit, if you look a little closer at it, you'll see that Powell's comments are actually quite important. Now, this can probably be rendered irrelevant if inflation data tomorrow comes in light. Could be rendered irrelevant. Who knows? We'll see what happens tomorrow. We've gotten a bunch of CPI datas from various areas of the world. They've come in pretty low. Energy prices are down. We know that. We'll see what kind of impact that has. But now oil prices are going back up. They're up 3% today. We just got PCE upward revisions. So they revised the Q3 numbers up, revised the Q3 GDP numbers up. This indicates stronger economy, stronger labor market, stronger inflation. Tomorrow's a crucial day. We got to see what happens tomorrow. Things are going to change tomorrow. We're either going to get continued rally. If PCE comes in light, that is a justified move. We're justified to not immediately bounce right back off the 200-day moving average. But we've seen this before, okay? One of my biggest, probably my single biggest pain points in my investing career was, I believe, May 4th of this year. I was expecting the Fed to take 75 basis points off the table and that to lead the market to rally. The Fed took 75 basis points off the table. The market rallied that day. However, the next day, the market gave it all back and then some. That was tremendous. These tremendous moves are not impossible. We're in very interesting times. We didn't hear anything new from Powell. We didn't hear anything new. If you heard something new, please leave it in the comments. I would like to know, because I did not hear anything new. The one dovish piece of information that I took out of this was that 75 basis points, not going to happen in December. Not going to happen. Bullard kind of hinted that he wanted it. I was thinking maybe there's a small chance, but if Powell says today that it's not going to happen, it's not going to happen. Obviously, it's probably not going to happen. But while we didn't really get a whole lot new here, markets rallying, I think the Fed is overall taking a continued tightening stance, minimum 5%, through 2023 into 2024. They're not saying they expect inflation to come down dramatically tomorrow. They're not really giving us any indication of that. They're saying the jobs data isn't looking so good. Powell said the biggest component of PCE is basically a proxy for the jobs data we got today. We'll see what happens tomorrow. Tomorrow's the data. We'll see what happens. I might need to change my tune, but that's today's video. We're keeping it short. We're just letting you know how we're digesting things. We'll see you tomorrow. Until then, peace out.